Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, March 15th, 2019 DecisionPoint show with your hosts, Carl and Aaron Swedlin. For those of you joining us for the first time, welcome to the show. And for our regulars, welcome back. So let's get started. Lots to cover as usual. So as far as our agenda, I'll be looking at the S&P 400 and 600 relative with the S&P, so we can see what is going on there. Monthly review, not happening today. That was last week, but do pay attention. We are going to be doing our weekly. We're going to look at the decision point indicators, the big four: dollar, gold, oil, and bonds. And then today, for a bonus, we're going to talk about Boeing's stock a little bit. And then we will finish off with a more in-depth look at the long-term trend model, an indicator that we're putting together on the S&P. So let's go ahead and get right into it. I will start off. Dad, how are you doing today?
Pretty good.
Yep. I can't ask you how it's going in Redlands since I'm here now. So
Right.
Beautiful day. I hear we're going to be over 70 by the end of the day, which, wow, I don't think we've seen that in about 6 weeks. So I'm looking forward to that. All right, so let's get started with the relative chart. This is IJH, IJR. I also have the large caps, the S&P 100 in relation to the S&P 500. So I just wanted to get a closer look here. And, you know, one of the things I was noting is typically, when we get these relative readings, when we start to see that the small caps are underperforming, that typically is something you see during a decline. You really want the small caps and the mid caps to perform alongside of the S&P 500, not do poorly, because typically they do travel, the relationships travel differently. They diverge. And what we want to see is small caps and mid caps starting to turn back around, but we're not seeing that just yet. And to me, that says we are vulnerable to a pullback at this point, but we'll see. It didn't seem to hurt things too much from, if you go back up here, you know, we got the decline, but we're starting back up. We're just not seeing the participation just yet from the S&P 400 and the S&P 500. I'm sorry, the Russell 2000. All right, so let's go ahead and look at some of our regular charts that I review in the DP Alert a lot of times. So we're going to start with our scoreboard indexes. And of course, you can see that the Dow Jones at this point is on a PMO sell signal, but we did get the long-term trend model buy signal. And right now, as you can see, the 5-day EMA, though it dipped briefly before below the 20, is now heading back up. And you can see that as far as today's trading went, we ended up with a nice support on the 20-day EMA, just like we did yesterday. So that is a positive development, and you can certainly see that the PMO is starting to slow. But something to consider is that we're not quite getting the kind of, even with the volume, and Dad and I were talking about this before the show, that we were looking to see if we would get rid of the negative divergence going on here. And in this case, with the Dow, it would be a confirmation that we got to the downside. We at least get a little bit higher top here, but that's kind of an intermediary type of a top. I'd be more interested in the larger tops. And right now, we need to see it get back above if we want to get into a positive situation.
It's, good to note that the industrials were heavily influenced by Boeing this week.
Yes, that certainly depressed that index, no doubt. Watching it fall like it has, it's certainly done that. All right, as far as the weekly chart, still on that buy signal for the PMO. I had drawn this long-term rising bottoms trend line, and we did end up just under it this week. But if you look, we still stayed above that 17-week EMA. So, while it's a negative development, we closed pretty, a lot higher than that rising bottoms trend line. So I feel like it did hold that support to some degree, especially when I see, again, the price being above the 17-week EMA. NASDAQ 100. All right. Well, I marked a bunch of different support and resistance lines. And at this point, if you look at the top we had back here in October, this lines up a little bit here with these lows, but also with that top back in June. And so that's what I was watching as far as that resistance line. And you can see we did poke just a little bit above that on the NASDAQ 100. But I think the positive development really this week was the fact that we got that PMO buy signal, which came in, I believe, on Wednesday. All right, weekly. And here we go. You know, we had broken down below that very steep rising bottoms trend line, and we're coming back up and testing that. I could probably at this point, I think, draw, you know, the rising bottoms, make it a little less steep by adding in that bottom. And I think I will be doing that next week so we can get a better picture of what's going on. But the fact we got that break above that top we saw in early 2018, I think that's a positive development. And let's look at the OEX just briefly. I don't see anything really different going on here. We did get the PMO buy signal on the OEX. And if you look at what happened with the S&P, we're not quite there yet. We have turned the corner here. We have a bottom on the PMO, which is positive. We're still looking at a negative divergence going on here, despite that heavy volume that was added today to the reading on the OBV. But we're still certainly seeing a negative divergence when you look at the price tops. And we do want to see that change. And that will give me a little bit more confidence in this bullish ascending triangle that I've drawn. We're not getting a decisive breakout just yet. You want to see a 3% move to the upside, and we're not quite there. We'll be watching that, of course, closely next week.
Let's make a point that the high volume today is not an indication of climax or of any kind. It's basically end of quarter options expiration, and you get really high volume, and you can't give any more meaning to it.
Right, right. Okay, and as far as the weekly goes, let's see here. All right. Again, buy signal is still intact, and you can see we did start to decelerate, but we're now back in acceleration mode as we closed, of course, above our closes from the previous week. That was a big move when you consider that from one week to the next, and that breakout too is a good sign. All right, let's look at the indicators. I think that they probably have gotten themselves updated, so let's go ahead and make sure. Yes, indeed. Okay, I'm going to grab the annotation tool real quick here because I want to show where we're lined up as far as whether we're looking at climactic readings or not. And I would say that they are somewhat climactic when you're looking at the advance decline information. And certainly I would look at it as climactic as far as our new highs are concerned. So again, what I do is when I feel like I get these climactic readings, we especially got the climactic reading here earlier at the beginning of this week, I think was when that came in. And what I usually do is look after I get a climactic reading, I look and see what has been happening so far. And you could see before that climax, we were already in a decline. So to me, when you get this positive reading, I look at it as an initiation. And that's certainly what we got. Now, my concern at this point is we have these climactic readings here on the new highs. Didn't quite see that on the net AD volume and breadth. And so for me, seeing a big positive here on the new highs, that could be the sign of a possible buying exhaustion lining up. And also look at what happened with the VIX. We finally got a penetration of that upper Bollinger Band. And that generally leads to a decline. You can, I mean, I used to have the vertical lines here so you could see, but it's pretty much right on. When we get people a little too complacent, that's when you start to look for a decline. I think that's where we are right now. And I will save that. This chart and the others that I'm showing you are in the DecisionPoint live chart list. Just go to the DecisionPoint blog and the link is right there at the top. All right, so looking at the short-term indicators, we look for these divergences. They don't happen very often. And what you and I have decided that is that it's an attention flag. It doesn't necessarily tell us what's going to happen, but it tells us something is likely to happen that's different. We might have a change of character going on with what's happening in the market. And in this case, I would say we ended up getting that consolidation going sideways, and then we ended up with a decline. But right now, as you can see, super strong indicators moving higher, getting overbought. They're somewhat overbought, I would say, at this point. But I think we can certainly accommodate higher readings at this point. And I'll finish here with the intermediate term indicators and pass it along. And what you can see, and we look at these indicators before the show and they haven't quite updated. So we kind of give ourselves a guess as to what we're going to see. And just as we suspected, continuation of the move to the upside on both the ITBM and ITVM. I think that's always kind of positive to look at, but these can get kind of twitchy. I get more excited when I see a positive crossover personally. That's when I usually see something going on. I mean, here's a negative crossover that finally had occurred, and that's when we started to see that corrective move. So at this point, it is moving upward, which is positive. But again, I don't want to get my hopes up too much until I see a positive crossover, because you certainly could see it turn right back down on a decline, which it does look like we might be seeing coming up here based on just what I was seeing with the VIX and on the climactic reading on new highs. Okay, passing it to you. Let's start off with UUP.
Okay, the dollar last week had broken out of a rising wedge, the opposite of what we expect, but it didn't last long and it came back within that wedge. But right now the structure is still a rising wedge, but not as tight. Mm-hmm. And notice that it was a triangle to begin with. The lowest downtrend line, that was a triangle. Then right above it was the first iteration of the rising wedge, and then finally we've got a new rising wedge. Mm-hmm. Right now, I'd say it's looking negative. PMO's going down. Mm-hmm. Let's try the weekly.
Yeah, it looks like a sell signal lining up there.
Yeah. Okay, this is a broader indication, or a broader view of the rising wedge formation. It actually goes back to the top last summer, and notice that the last rally did not quite make it to the top of the wedge for a second time, and that's not looking good. It shows weakness within that structure, and it could very well break down. That's what I would be looking for at this point.
Yeah. Two tops below the signal line, also not something you want to see at this point.
Right.
All right.
Gold, struggling a little bit as usual. The PMO, the daily PMO, is dead neutral at this point, moving sideways. Was still, I would say, price is still rallying from the beginning of the month, which is good.
Mm-hmm. All righty.
Broader context, you can see the top of a trading range that's gone back several years, and we've got a new rise in trends based on the low last week, and the PMO, the weekly PMO, is well above the zero line and just barely moving higher, but it's still a positive setup there.
Mm-hmm. Even after that big decline, we are still seeing the rise.
Right. Crude oil, we were looking at a rising trend channel, and as of today, it topped. USO topped, and so I've made the dominant structure a rising wedge, and the PMO very positive, still rising. So and did close near the highs of today. So it may not be done.
Mm-hmm. All right.
Looking at the weekly, it's still a positive picture. It's broken above resistance, which is now support, and weekly PMO is rising and above the signal line. We've got, I would say, that the top target for crude is about $76.
Right there. Yeah. All righty.
Okay, TLT, we've got a major flag formation. Also, the flag happens to be a falling wedge, so that's basically two bullish formations. It's struggling trying to get out of there, and the PMO has turned up today, but let's take a look at the weekly. Maybe we can get a little more insight. Okay, so that flag is near the top of a trend channel that's 2 years old. So that would, if it does break out, that would be the next area of resistance that you would be looking at. Weekly PMO is rising.
Mm-hmm. All righty. I think it's time for some bonus material.
Okay. Yes, we have Boeing has been in the news, of course. Now, what I wanted to point out is that before Monday, which is where the gap is, it was declining. It had been declining for a week from the peak, the top at the beginning of this month. So there's possibly some more negative stuff in there that is bleeding through. But obviously, and when it started that decline, no one knew that there was going to be a crash. So that has nothing to do with that initial decline there.
Right. And we had that sell signal come in, long before the big gap down as well. So we
right. PMO
very overbought.
And it's not like this stock is over or undervalued. It's still a PE of 21, and so it could get cheaper.
Mm-hmm.
Can you switch that to a weekly format? Okay, see how you have that consolidation for 2018, and then suddenly you get a breakout, and that breakout is failed. So that's not a configuration that I like to see. I'd say it's a negative. Of course, we do have the crash involved in that.
There you go.
But partly, no, it's not all just the crash.
Right. Yeah, last week, that was a pretty negative bar. And let's see. So it topped today. The PMO topped on the weekly chart today, it looks like. Well, maybe it was earlier. And then there. Oops, I need to cancel. All right.
Okay, this is I wanted to introduce a new indicator that I'm going to be following. But first, I wanted to point out that here we have the top 4 indicator panels. They are all based on different calculations. The PMO is based on a rate of change calculation. The ITBM is an advanced decline calculation. The ITVM is an advanced decline volume calculation, and then you get down to one of StockCharts indicators, which is the bullish percent index, and that shows the percent of S&P 500 stocks that are on point and figure buy signals. So you notice all four of those look just exactly, well, not exactly like, but they're the whole thing to remember here is everything, no matter what you are calculating, it's all based on price. So you're going to get a lot of similarities. If you go down to the next one, the ITTM SPX, exclamation ITTM SPX, that's a symbol that you can follow. It's available to you in the database now. But again, you got a very similar shape, and it's based on crossovers of the 20 and 50 EMA. So this is an intermediate term trend model buy signals percent. Now the next one down, that is a truly long-term indicator, and I wish I had thought to do this way back when I was collecting and inventing all kinds of data. But what I concentrated on was percent of stocks above the 20 moving average, the 50 and the 200 moving average. The LTTM is a long-term trend model. It's when the 50 crosses above the 200, and that's the golden cross that we hear about so often. And but this gives a summary of how many stocks in the S&P 500 are on long-term buy signals. Notice that back in, I don't have any idea what it might have been in the beginning of 2018, but notice that that's September, October top, that the LTTM was reading at 75. That's what it was at that point. So that's a tentative best record that you can get there. And notice that, could you roll it down a little more so we can see it? There you go. And it was about 32 back in the beginning of this year. So I think that's like I say, a nice long-term indicator that you keep an eye on. And the crossovers, you notice that the first several months of the indicator, and I set that on a 20 moving average. It's just, they're just right together because it moves so slowly. And so the crossover is not necessarily going to be anything that's terribly reliable during a bull market. But of course, you do see a really sharp move down away from the moving average. And again, on the bottom coming up, you see a nice clean bottom and then crossover. So I think it gives us some information we didn't have before, and I quite like it.
Yes, I think it's a pretty good indicator. And
those are the symbols. If anybody's interested in following it, I probably won't be publishing on a regular basis because it's a slow indicator.
Yep, and there's how you can set it up on your chart right there. So you just use the price indicator, and then you can put in whatever one you want. And you know, all of the decision point indicators, I think pretty much all of them have that exclamation point in front of it.
Right.
So
Right.
that's another way to know which we are, you know, which indicators you're using, but you use the price indicator as far as what to select. So
The reason we can't go back and do previous data on that calculations because it's based on the number of stocks, or it's based on the stocks that are in the S&P 500. and that does change somewhat. So as we go back, there are going to be less. There are going to be fewer stocks that are currently on the S&P 500 list that were listed in the S&P 500. Say back in 17. Not a significant amount, but it's just
it could be misleading.
It sort of gets the data a little cloudy.
Right. I like it. I think this is a great idea. Are we doing this manually, or is this something that?
Yes, I do the scan every afternoon. I haven't updated it today because we had to start prep for the show, but yeah, I'll be updating it later.
Mm-hmm. Yep. Hopefully we can twist some arms at StockCharts so that they can start doing it for us. All right. Well, I guess, one of the questions, and of course I'm getting it a lot, excuse me, a lot on Market Watchers. And I think, let's go look at an S&P chart. But the question, of course, is, where are we standing as far as bear market versus correction versus, what kind of lows are we going to be seeing? And my opinion as of late has been, I don't see us testing these December lows anytime soon. I would just be looking for some corrective moves, maybe down to that, with the Dow anyway, down to that 24,250. But let's look at the S&P.
Yeah, I don't. I've been thinking about it. I mean, it sure acts like a bull market at this point. I mean, it just won't go down. And like last Friday, we had a nice sell-off, and then it closed near the highs of the day. And I thought, geez,
yeah,
it's not really going to be a bottom, is it? But it was.
I know it's been kind of frustrating, I have to say. But like I said, I think I'm definitely out of the bear market mode at this point.
Right.
I mean, you can't argue with the charts. You just can't. And, I think the monthly chart even is giving us a little information as well. I'll just take a peek at this before we go. But you can start to finally see that we're getting some deceleration on the monthly PMO. And really the thing that convinced me that we were looking at a possible bear market. There were a couple of things, but that negative crossover was one, because we don't see those that often. And then, of course, we had that really big negative divergence going on too on the way up here. But you know what? Now we're starting to see that deceleration. And a lot of times when that starts to happen, I mean, that's when here's a corrective move here. And we started to finally get that monthly to start turning up. So you're out of bear market mode as well, then?
Right. I'm not. But on the other hand, it's quite overbought at this point. Mm-hmm. Although the intermediate term indicators have corrected back down some. So, yeah, I'm definitely not bearish anymore.
Except for in terms of what, like pullbacks and corrections.
I'm sorry, what?
Pullbacks and corrections would probably be the only.
Right. Right. Like right now, that the VIX reading that we got touching the Bollinger Band, it indicates that we've got a couple of days. We should see a short-term top.
All right. Well, I want to thank everybody for being with us today. And do remember to complete that survey under the viewer if you're watching. We love to get your feedback to hear what you think of the DecisionPoint show. And as a reminder, we do air on Fridays at 4:30 p.m. Eastern. Have a great weekend, and we will talk to you on Friday.